Hi, George Wong here from Freedompreneur Coaching and Consulting, and I'm sending you this video exclusively because you've already registered for the upcoming Get Paid to Get Clients webinar. And there's so much to cover during that webinar, I wanted to start your training early. And I wanted to show you why the material I'm going to cover during the webinar is so powerful and important to your business. So the short video you're about to see takes you through the Profit Escalation Formula. And in this video, I'll show you where to focus your time, energy, and other resources if you want to boost your cash flow and profitability the smartest and fastest ways possible. Here's what the Profit Escalation Formula looks like. So your gross profit is equal to the number of customers times your gross margin from each sale. So your gross margin is the selling price minus the cost of providing the services or products. That leads to your gross margin times the frequency. So gross profit is number of customers times gross margin times frequency. So no matter what kind of business you have, it doesn't matter what industry you have, whether you're service or product oriented, this is the same for any company. A company of $100,000 or a company of $100 billion. The only way to increase your gross profit is to increase the number of customers and or your gross margin and or the frequency, which is the number of times people buy from you. Let's take a closer look at this. So let's suppose that you increased your sales volume. In other words, you have more buyers by 15%. Okay, you increase your sales volume by 15%, and your revenue and gross profit will therefore increase by 15%. This is just following simple math. Okay, now if you increase your sales volume by 25%, so 25% more people buy from you, guess what happens to your gross profit? It also goes up by 25%. So increasing your sales volume results in a one-to-one linear increase in revenue and gross profit. Let's take a look at another example. So let's say you increase the frequency with which people buy. What happens? Well, let's say 15% of the people buy more often. Okay, so 15% increase in frequency of purchases, and guess what happens to your gross profit? Yes, a 15% increase in gross profit. So here again, increasing the frequency of purchases results in a one-to-one linear increase in your revenue and gross profit. Not necessarily a bad thing, but still one-to-one. Okay, let's look at another example. Let's look at the third variable in the Profit Escalation Formula. That third variable is increasing your fees. Okay, that is increasing the gross margin. Okay, so let's say you sell a product or service that has a gross margin of 20%. All right, and you increase your prices by just 10%. Okay, increase of 10% in fees. Guess what happens to your gross profit? Yep, it increases by 50%. So let's say you increase your fees by 20%. That increases your gross profit by 100%. So paradoxically, this method of increasing gross profit is the absolute best way to do it. So focusing your efforts on increasing your prices and fees creates a huge multiplier effect. And one of the key ways I'll teach you how to increase your fees reliably and have people pay it is to set your fees based on value provided. So during the upcoming webinar that you're registered for, I'll show you how to increase the value of what you provide. Let's take a look at another look at this in perspective. So let's look at all three variables that we've covered. increasing the number of times people buy, increasing your fees, and increasing the number of people who buy. So, for this example, let's say you have a product or service with a gross margin of 20%. Right, this graph shows what happens to your gross profit when you compare the increases in price versus increases in frequency or number of times people buy. Okay, so here in the red bar, or the red line, is the increase in customer frequency or number of customers who buy. And let's say that increases by 15%. Remember, that gives you a linear increase, 15% increase in gross profit. But for the same gross margin, your price increase of 15% gives you about a 75% increase in gross profit. Same thing. If you have a gross margin of 60%, if you increase your prices, you will increase your gross profit more than if you put your energy and effort and money into increasing the number of people who buy and the frequency with which they buy. So the truth is, most entrepreneurs don't realize that it's easier to set your fees and prices based on the value you provide rather than basing it on the market or the competition. And until you understand this principle, you'll leave tons of money on the table, dollars that you'll never see again. And so my recommendation is to increase all three: number of buyers, the average transaction size, and the frequency with which they buy. But if you're going to focus on one thing, it is to increase your gross margin, increase your fees. And in the upcoming Get Paid to Get Clients webinar, I will show you how to increase the value that you provide to your buyers. And that in turn will enable you to, guess what? Increase your revenue and gross profit faster and smarter. See you on the webinar.